Hey everyone, it's Ryan with Holloway Benefit Concepts. Today, we're going to talk about the 5 reasons why you should always pay more than the minimum required contributions towards your health insurance. From a business standpoint, this might sound crazy. This might just sound like, I'm trying to make a quick buck. That's not the case. So in today's competitive hiring environment, one of the big things, the reasons why people have benefits, it's to recruit and retain your talent. One of the biggest things, after someone talks to you about salary, they're gonna want to know what your benefits look like. If your benefits cost a lot more than the next company, because I guarantee whoever you're interviewing, they're interviewing other people as well. If the pay is the same, but your benefits cost more than the other guy, guess where they're gonna go? This is key in today's environment for recruiting and retention. Reason number 2, if you have a big hourly employee base and you're trying to get them on insurance, they probably can't afford, $200, $300 a month for their insurance. If they're making $10, $12 an hour, that's a big portion of their paycheck. Really think about your workforce, their income levels, because by doing that minimum contribution, a lot of times you're immediately excluding a big portion of your hourly base just because they can't afford to take part. Reason number 3, remember, health insurance, especially in the group market, it's a volume game. You want to have a good pool, a good healthy pool of employees. Who does that typically represent? Your younger employees. They're going to help bring your costs down because 1, it's going to lower the average age of your group. 2, a lot of times those are your healthiest employees. So if you're discouraging them by charging them higher rates that they think they can't afford, you're making your costs higher just by having them not take part. Average age is going up, you end up with unhealthier people taking part. That drives your healthcare costs up. You really want that young employee base enrolling. That helps bring your costs down for everyone that's enrolled on the plan. Reason number 4, it's actually cheaper for a business to pay more towards your health insurance premiums than it is to do pay raises for your entire staff. If you're looking for competitive ways to keep your employees on board, an increase in a health insurance, if you're going from 50% to maybe 75% or 50% to 100%, in reality, that's probably $200 to $300 a month per employee. If you don't have a large company, that's going to be a lot cheaper than giving everyone across the board a pay raise. A pay raise minimum, we're talking $5K, $10K per person across the board. Multiply that by however many employees you have, where if it's a $200 increase on benefits, which I promise will make a lot of people happy, that's $2,400 a year. A lot of times it's way more affordable from a business to increase their contributions to benefits than it is to pay higher salaries. And reason number 5, health insurance costs that you're paying as a business, it's a write-off. It's an expense. When you give a pay raise, you're paying higher payroll taxes because you're paying unemployment, you're paying FICA, and so are your employees. Where if you're paying more of the health insurance premiums on the company side, that's an expense. It's a way to keep your tax liability down, and you're also not increasing tax liability for your employees. So if for no other reason, if you're paying taxes as a business at the end of the year and you're always looking for ways to lower that tax liability, health insurance premiums or benefit premiums in general, it's a great way to lower that tax liability as a business and further help your employees. This is Ryan with Holloway Benefit Concepts. Thanks so much for watching. We'll see you next time.